Good morning and welcome back everyone to the channel. In this edition, we're going to be looking at one of the third-party administrators um, for health insurance sector, and I'll just break it down what a third-party administrator is. So whenever there is a health claim that is to be made at um, the hospitals have intermediaries to take care of those claims. A lot of claims you would know would come through cashless, and there would be health insurance cards that are applied to enable cashless claims and those kind of things. And these are not handled mainly by direct insurance companies. Currently, it is not being handled. In the future, there are talks of insurance companies um, honing their own third party administrators to take care of health insurance claims, but that is highly debatable. I feel similar to what is happening in telecom. For example, where I did talk about Indus Tower, and within Indus Tower, what is happening is one, you have the core telecom services, and the other one is the tower operator operations, um, which is beating down heavily on the margins. I feel moving ahead, health insurance is going to be about experience. Customer experience is going to be the differentiator. We all know how hard it is to sell a health insurance. It is still a very um, push kind of product. It is not a pull product, and hence customer experience is what will define the way market share is cornered. So I feel third party administrators are going to play a key part in enabling infrastructure which is outside the purview of insurance companies. And Medi Assist, what we're going to be talking about is a brainchild of one of Infosys co-founder, Mr. N. Raghavan. Through his seed capital in 2002, he got into Medi Assist, and Medi Assist's rise and Medi Assist existence coincident has been in parallel with the private health insurance. Private health insurance, as we know, or private insurance, as we know, really began to take off in 2000. And before that, we had all the PSUs that were there, and there were not many joint ventures between foreign insurance companies and Indian insurance companies. But after 2000, there was a fillip, and things did begin to change. Now we are in talks of increasing the joint venture to 100%. So foreign insurance company can come in and without a local partner set up shop in India. So Medi Assist really came into my side because of its acquisition of Paramount. Now, Medi Assist held close to 6 to 7% of the group health business in India. So, group health is basically when an insurance is provided from the side of an employer, it is a group cover. So, for example, there's a company called Narayan Hrudalaya. So, Narayan Hrudalaya, in a typical sense, has a lot of employees, and those employees need to be offered a mandatory group health insurance policy. Um, so that group health insurance is handled and enabled for large corporates by TPAs like these. So if you look at the key stakeholder in the health insurance ecosystem, we can see that there are members, which are the group and retail policyholder and beneficiaries of health schemes. Currently, Medi Assist, 70% of the revenue comes, 70 to 75% of the revenue comes from the group health segment, and the remaining comes from the retail health segment and all the other segments that it provides, like advanced data analytics and handling complex claims and those kind of things. So also enabling cybersecurity and data privacy. So it's getting into those value added and enhanced value proposition to its own stakeholders. But in terms of the infrastructure, if you look at the key stakeholders here, there are payers, which are the insurance companies, the state central government, and there are the networks: inpatient, outpatient, hospital, clinics, labs, pharmacy, and telehealth. So in a sense, how does the TPA make money? For every 100 rupees handled, 100 rupees premium that the company handles, close to 3.5 to 5.5% of those 100 rupees is paid to the TPA as a facilitating fee, as an administrative fee to take care of those premiums. So because the capital investment in a sense is not that high, and if you look at the cash, average cash flow for the company. So if you look at the free cash flow for the last 3 years, average is 164 crore, and the free cash flow average for the 5 years is 288 crore. And even the debt to equity ratio is 0.06. So it has negligible debt on its book. It is producing free cash flows, and as a result, through its internal accruals, is able to um, acquire a lot of company. So even after the 2024 acquisition of Paramount Health, the company has close to 100 to 200 crore worth of free cash flow in its book. And from here on itself, it is still looking to make more acquisitions. So, it acquired Medvantage, um, here Mayfair in 2022, Medicare in 2018, and Paramount Health in 2024. So if you look at the margins, right, the margins of the companies that it's acquiring has not been that great. So for example, it is looking to create efficiencies through the margins of the companies that it's acquiring. So for example, if you look at the Raksha initial margin, it has a negative margin. And in terms of the EBITDA margin, so Medi Assist margins is sitting close to 20 in between 20 to 25% as of Q1 of FY25, and Q4 of FY24 it was sitting close to 20%. If you look at the PAT margins, right? So for example, it did a business of 635 crore as at FY24, and it made a profit of 69 crore. Um, and these are thin margins, but what is anticipated is that the growth of TPAs is going to far outweigh the growth of health insurance companies, because TPA has that other side of also facilitating for group health insurance for large corporates. So, so we'll have to watch out as to how this one goes ahead. But I have a feeler that TPS should do well. The one disadvantage that I look at is the barrier to entry. What are the barrier to entries for these TPA companies? But obviously, if you're handling close to 23 to 24% of India's group health insurance policies, and also the thing is, it is growing, and internal cash accruals are going to keep increasing. So hence the call of the top management to really go on and acquire more companies. So if you look at the Paramount acquisition, Paramount has been a licensed third-party administrator since 2002. Um, it had raised capital from Fairfax Asia. Paramount TPA provides comprehensive claims management services, and also it has its own proprietary technology platform, which is now going to be integrated with Medi Assist. It handles 34 billion premiums in group segment and 4.5 billion premiums in retail segment. And it also administers benefits for several government health schemes like the MJPJA AY, which is for Maharashtra. Paramount TPA was the fourth largest TPA by total revenues. In terms of market share, it held 6.3% the group segment and 4% for the total health insurance industry. So if you look at the snapshot of the Paramount acquisition, so it was handling close to 30 insurers. Three life insurers, had a network hospital of 25K hospital network, 35 plus branches across India. So it was a big acquisition in that sense, and that acquisition costed Medi Assist close to 311 crore. And even after that acquisition, the company is left with another 100 to 200 crores worth of free cash flow. So if you look at this growth for the premiums within the group segment, we can see that between FY21 and FY24, the company really grew by 22.5%. The premiums under management grew by 22.5% CAGR. So that's a high rate of growth. And here we can see that its AUM right now is premium under management is around 3866 crore. In FY23, it was 3266 crore, and it has been growing at quite a rapid pace. In terms of large group portfolio, it handles close to 3,000 plus group accounts. The group premiums are growing by 32.3% CAGR. As at FY24, the market share in group segment was 6.2%, but now with the acquisition is close to 23 to 24%. And it handles 27 insurance partnerships for the group segments. In terms of the combined premiums under management, we can see that for Medi Assist and now within Paramount, so we can see the Medi Assist was handling 19,050 crore worth of premiums, and now Paramount has brought in additional 4,000 crore, which is added to his premium under management. On these 22,916, it will have a margin of sitting somewhere in the range of 3 to 5%. So if we do 10% of this, and these are long duration contracts. So if you do a ballpark calculation, so we do like 22,916, and if you assume that it's 5%, 10% would be 2,291 crore, and 5% would be around 1,100 crore, right? 1,100 crore. And if we see the profits profits generated here are close to 82 crore. So in terms of the projections that are there, in terms of the long duration contracts and the revenues that are already sitting within the books, there's good visibility for the company, and also the growth, the pie itself is growing. So this should bode well for the company. So here we can see that the group segment constitutes 63.4% as at FY24, 30.4% for so 63.4% from the industry. 30.4% is held by Medi Assist and Paramount, 6.2%. And health insurance industry, we can see that 76.4% is industry and 19.6% handled by Medi Assist and 4% by Paramount. In terms of what is the split of PSU versus private insurers, most of the premium under management is coming from PSUs. Understandably so, because of its size and scale. 60% is coming from the PSUs and 40% from the private insurers. The fee yield on premiums managed, as we discussed, it was close to 3.3%. And it would sit within the ballpark of 3 to 5%, but right now on the average is being down to 3.3%. And cashless claims count by percentage is sitting at currently 58.5%. So if you look at some of the key points of the acquisition, group is the largest and fastest growing segment in health insurance. Medi Assist to gain 6.2% incremental share, incremental 4% market share in health insurance industry. Medi Assist would grow to be 2x of next 3 players combined in terms of premium. So these are some of the key highlights of Medi Assist. Now, if you quickly go into screen and just see what the numbers are. In terms of market cap, I really like companies which are sitting below the market cap of 10,000 because the base is so low, the growth factor can be very high on these types of companies. And given the nascent stage that TPA business is really in India, really started off in 2002 and still developing because of the low base that it had in 2002, and now health insurance really being picked up because of a large proportion of people entering the workforce and realizing the importance of health insurance and health insurance inflation as well. Inflation as well is sitting close up to higher of 15%. So in terms of the current price is sitting at 593 rupees. And if you look at the ROC and ROE, good numbers for the capital optimization because of the nature of the business, because it's an intermediary and not a lot of working capital is involved. Hence, it is able to produce the free cash flow that it is producing. So yeah, that's the snapshot of Medi Assist. That's it from my side for this edition. Please let me know in the comment section any other companies that you want me to analyze and do a deep dive on. Thank you and goodbye.